Hey everyone, John Henry here, SSFTG. Welcome to the market psychology video. This time around, we're going to be taking a look at candle by candle analysis. You know the drill. It's been a little while since we've done one of these, and I thought it would be good to kind of get back in the groove and kind of catch back up and see what's going on, especially with some of these wild moves. They can really throw you for a loop if you're not following along with the context and what's going on. So it's great practice either way. So taking a look at the very first candle of the day, what do we have on the S&P here? Well, we've got a gap up. The next question is this an inside or outside gap up? If we look back to yesterday, the previous day, we have the high right here. We can obviously see that this is not an outside gap up. This is an inside gap up, meaning that we have, there is some bullish strength, but not as much, right? If you're looking for like a breakout pullback, it hasn't broken out yet. So it remains to have, a little bit to be seen. And all eyes are going to be on that previous high. That's going to be kind of the barrier that we're going to have to keep our eyes on. Another thing that I like to take note of is the first 5-minute volume, just to see what the intent of traders were in where they were putting their money right at the open. So if we look at the overall calculation here for the first 5-minute, that is right there at 43.42. And that will be the next one. And let me change the color of that to brown. Sure. That'll be the first 5-minute POC. And then that previous high will be right up there. So as far as the continuation move, you've got an inside gap to the upside, but it's a really, really strong bull bar. There's going to be a lot of traders who are thinking, okay, well, we know these markets have been nonstop to the upside. And when the pullbacks, when they pull back, they end up being big V bottoms and then going right back up. Maybe that's what this is, and we have another rally back to highs. There will definitely be buyers looking to buy into this type of bull bar. My concern, obviously, is that you'd have to buy directly into 43, 45, 75, and that could potentially cause some issues. It's not that buyers won't, it's just going to be a bit challenging. What would make a lot more sense here would be to wait for the pullback back to where they have already displayed dominance. 43, 42, 50 in this case, or right back around the open of the candle, right about at the open of the day. That would be a very logical point of interest for the market to want to find some balance on a pullback, because nobody wants to buy way the heck up here. We get the next candle in a big breakout to the upside. That's good in the terms of a very strong bull bar, and that's adding a lot of confidence to the buyers. Here again, we don't necessarily want to be buying way up at the top. That pullback looks really, really nice now. If we can get underneath that previous candle down to the settlement POC area, not settlement, the open area. Settlement's way the heck down here. No, over here. There we go. We've got just a scenario of almost perfection for the buyers to try to get at least a secondary bounce to the upside. But it doesn't start up here, right? It more likely is going to start down here to try to find some value on this. Well, there you go. We've got that beautiful pullback all the way back down to the tick, bounced off of that 5-minute POC. I don't know about you. I know my luck. There's no way I would have been filled there. But that is a really nice zone of interest where buyers are able to kind of kick that market back to the upside. And we see that response in this bear bar. I do have a little bit of a concern if we look at the way that the candles are closing. Here, you'll notice it went from open, close, and then close to open to the next one. There's no gapping. It's just right on top of it. But here we have this incredibly strong bull bar, and then it gapped down? That doesn't fit. That doesn't make sense, right? Why did it do that? Now, we are seeing some caveats. Obviously, it's a very weak bear bar. It's closing back above all of those zones of interest. If buyers bought the dip for a scalp, they were likely scalped out pretty quickly. But there are some concerns, right? Why is it gapping down like that? There's something a little wishy-washy going on here. And speaking of which, look at the extra gapping. Now we've got another one. We've got the close into the open, another gap, but maybe a bit more bullish. Okay, maybe the buyers are starting to pick back up. We could easily see this as a possible pennant. This would be the nice breakout continuation for another good leg, probably the size of bar 1. If that's the case, and we see this really strong bull bar, all it's going to take is a trigger above that to get those bulls going. And it does feel like you're buying very high, but that's the important part here, because in the context, this is the launching pad for the buyers to try to get that job done, but they must trigger above this bull bar to get that going. right? They've got to hit up here and then pop it back to the upside because we're closing above this 45.75 area. That's all the context. The gapping is back up, which is good. We've got a little pennant formation. Jeez. Okay, well, scratch that idea, huh? Jeez, oh Pete's. Gigantic bear bar back to the downside. And here again, look again. We've got the close into the open. Another gap down. There's either a lot of illiquidity going on, or there's some kind of pressure right at the end of the candle that they're trying to jumpstart something. The important thing that we have here is that the bulls tried it, right? That's their launching pad, and they couldn't even trigger in. Now, for the bulls who aren't stuck, that's a great thing, right? You know, not getting stuck at the highs is awesome. Everybody likes not getting stuck at the top. But that said, there's nobody really to defend this move down anymore, right? Like if buyers were stuck at the highs, if they bought above that candle, if we went above it and then went down, that would be a totally different story. Now we would have a reason for buyers to defend this move down because they're trying to find an escape route. But realistically, that hasn't happened. None of these triggers have taken place, and the only ones that made sense were nice pullbacks that have already had a healthy, profitable move. So this drive down, closing underneath all of that, that's a huge red flag. There's some definitive issues because now we've gone above that previous high of day, and we've failed right back down. Now, the other side of things, we possibly have bulls who are maybe trying to buy that first candle like we were talking about. And although it's not the greatest opportunity in the world, it started going in the direction a little bit, kind of went back underneath it, popped back above, and now they're way underwater. This is where the only bounce that I would expect to see would be more likely an escape route for buyers, which means that the next pullback's likely to be something along the lines of a second leg down. Now, the more likely area of interest, well, if we look at where everything has taken place, we've got this nice little pocket of wicks. So this would be kind of the zone of resistance for the market to pull back into, right inside here. We've got that little bit of a pullback. All right, nice little bull bar back into this. It did close above the 43, 4250 volume POC, which is a bit of a bummer, but it only did it by one tick. Maybe it was a fluke, right? Show me two candles. If it were to close like up here, I know that it wasn't a fluke, right? There's no questioning if they close it at the top what's going on. But if they close it just like that, I'm going to need a little bit more info before I go saying that they've totally lost their grip. It might have just been a final market order that finally popped it back up because, take note, we have another gap that's going on here. We're more likely seeing some illiquidity going on. Some people may be a little bit nervous on this drive down. Could be helpful. But so far, this bull response up, I kind of want to see what happens. Sellers, realistically, if we start breaking above this, not likely that they're going to want to stay in this area, but we're right back into that pocket of wicks, and this is the zone that sellers are going to be looking to reject back down again to get that continuation. All right. Humongous bear bar to the downside. And if we look at this in context, the first drive down, if we subdivide this into an ABCD leg, A to B equals C to D. At this point, we've achieved a fairly substantial pullback, right? We've got a nice ABC correction, ABCD correction back down to the EMA. This would be a very logical point of interest, noting that we're also coming back to the previous major swings, that we're likely to see at least a bit of responsiveness. Given how strong of a bear bar down this is, it's one of two things that's going to occur here. This is either going to be a launching pad for a major drive down to fill settlement, or this is going to be a washout where the market tries to bounce back up again. Typically, a giveaway for that would be if we look at the volume. Now, the actual high was this candle here. So if we go from that candle all the way to this, the volume stuck all the way back in the middle. Yikes. That doesn't really help them a whole lot. That would potentially even dictate that the bulls are stuck at the bottom and they're underwater, having that POC here. That's a really big eye opener here. This next pullback, although this is a washout, we can see they're going to have some trouble when they come back up into these 4250s or so, maybe even a little bit ahead of it. Chances are that might be a little bit of a fight zone. We do get a bull bounce back. That's not a big surprise. We're seeing a lot of profit taking on a strong ABCD drive down back to the moving average. Who would have thought, right? This bull bar by itself, because of the completion of an ABCD back, could allow buyers to buy above it, at least for a scalp, because we know that the market area is going to want to try to get back up into these, 40s to 42s. Well, at the moment, if it's hovering around 39.25, that might not necessarily be enough room. But if you can get a small pullback, or even just buying here looking for an upside objective, within a point or so, it still allows plenty of objectives for scalpers, at least, inside that 5-minute POC at 42.50. That's going to be the tough area. If the buyers can't break through this, then we may be in store for a slightly larger correction back down, and this whole thing might just be leg one of a larger leg down. So we've got to really kind of play this cognizant of what's going on, because the market tried breaking above the previous high, and so far they've failed. We are in an extremely bullish market, and buyers are obviously going to be buying the dip. But the concern is, well, they just lost ground above the highs, and we know that the market likes to V-bottom at the open, cough, cough. What are the chances here that this thing does the same thing? It's a very realistic fear as we go into this move. Okay, we've got a really strong bull bar back up, and we find resistance right back where we expected to see the resistance take place. That was the earlier buyers who got stuck. They jumped ship. The fact that they closed underneath that is a big clue. It's only a one candle close. And again, if it were to close one tick underneath it, then okay. But this was at least a decent ways away visually. That's something to at least pay attention to. Do I want to make a response off of this initial bull bar? Maybe, maybe not. There's a possibility, depending on where the candle opens, that we've got candle gapping to the upside, and that could create more upswing. So it might be more beneficial for the shorts to see if they can get a little bit more confirmation, a little bit more info. And for the longs, see if we can get back above this 5-minute POC and get going, and then buyers will start trying to buy into the pullback. A doji doesn't help anything on the bull side. The buyers do have some candle gapping. So if we look from the top of the bull bar to the bottom of the doji, that does give us some potential upside objectives that would be looking for the high of day. So buyers would be looking to buy into this next pullback. The concern is that all of those buyers who were jumbled up inside these 43, 42.50s, they've been holding this market down while they're jumping ship. And this is only closing one tick away from being an incredibly bearish candle. That's a bit of a concern, right? We weren't so sure on this one, but this is adding a lot of context that the sellers might be looking for another leg down. Given that we do have an open gap here, it's really tough to want to be the first one to the party. That makes it a lot harder. So likely in that case, knowing that it's going to be difficult to be the first one to the party, you're better off looking at the likelihood of a 2-to-1. Being a scalper doesn't make so much sense in this case because, well, from a risk-reward perspective, that doesn't work. Right? So if they're going to be selling underneath this, we can already tell their objective is going to be a little bit wider. It's already through the lows, and that would make sense if they're going to be trying to drive down. So if the shorts are going to come in, it's a great spot for a high reward, low risk scenario for sellers to try to get that drive down. But because of that scenario, it's obviously going to be low probability. Otherwise, waiting for more context, more confirmation, more candles. Okay, man, ask and you shall receive. This bear bar just cut that gap in half. It just said, no, we're done. The bulls obviously are not so happy, and they very obviously now have exited a break even. And given the confirmation of the two candles, we already kind of had a notion of that, but this bear bar really confirms it. The thing is, it would feel very awkward saying, man, do I really want to sell right here? Like, you're selling directly into the moving average, you're selling into all this stuff. Keep in mind what the context is. The buyers who were in this long exited, right? They're out. They jumped ship at break even, and we see proof of that. So who's going to hold the market up? Who's going to be buying it? Right? Who's going to come save the castle from the assault? There's nobody that's going to be showing up to the party, especially not under a candle like that. That just cut that gap in half. Sellers will freely sell underneath that, just knowing that there are some huge downside objectives. Maybe this is the run to get that gap fill. There's another gigantic bear bar. Now, here's the concern. The last time we had a giant bear bar, it bounced immediately back up. That will be a concern going into this one as well. So obviously, seeing a bull bounce, if I were short already, this would be a totally logical place to see people taking profit. But notice where we are, right? We have settlement just a little further down. Doesn't have that far to go. And we know these markets are ruthlessly efficient. We kind of facetiously joke about it all the time. But I mean, really, it's right there. And if the market's going to make an attempt to close something, it's usually not going to stop until it fails at like one tick through or gets its job done. And so far, this a little far away. And with this kind of bear momentum to the downside, given that nobody's going to be showing up to the party to hold it up, I would expect to see more bears to the downside. Jeez, big old bear bar back down again. And note where they closed. Very important where this candle closed. They were able to close underneath the settlement. That settlement price was on a doji, to be fair. But realistically, we've got some massive bear gapping to the downside now. So if we're looking at it from a bear gapping standpoint, that would be from the bottom of this candle here to there. There was another one here to there. That's obviously done already. So if we're looking at downside objectives, this further projects down that we should see continuation down to about 43, 25, 75 or so. That would be the likely objective to get down to, at least as far as candle gaps are concerned for now, until we get more info. We get more bearish continuation. And now again, incredibly important to look at where this candle closed. That is crazy. They closed all the way back down as a bear bar. That is a huge rejection. We didn't really create any new gapping. In fact, it was negative gapping. So we're still looking for the downside objective to be completed lower. And that would still make sense, especially given that close down. Wow, what a failure from the bull. The bulls just dropped the ball. Unbelievable. All right, gigantic drive to the downside. Huge candle lower. We're starting to get into the 10:45, 11 o'clock time where things start quieting down. And with this amount of drive to the downside, the next question is like, wait a minute, are we starting like a really strong trend lower? Or are we just going to get that big old V bottom like we always get on these types of markets? If we look backward, the move yesterday drove down, the initial drive down at least was 0.82%. If we look at this pullback, this drive down has been 0.6. In terms of parity, if it were to go a little bit lower to 0.82, that would put it down to 43.12. There's some definite potential for the market to want to try to continue. Sellers may still try to hold, but realistically, we are through their targets. So a lot of them are going to be trailing stops down. It's going to be quick to exit down here, quick to pull the trigger, right? It's just in the opposite direction. Holy cow, gigantic bull bar, huge bull engulfing candle back to the upside again. That if sellers were short and they were trailing down, they see a candle like that, Nah, I'm good. No thanks. I'm not interested in trying to hold through that. A lot of traders will, maybe try to jump out on a small little pullback to get back out at their earlier target areas down here. If it doesn't get down there, we'll likely see a lot of attempts and failures where they near miss, and that will add a lot of fuel to a fire to that V bottom to the upside. That's the same thing that happened if you look back on this one over here. They get this really, really strong drive down. Sellers try to get it. Nope, fail. And then it just slides away, and there's never a chance for them to do anything about it. That's the potential here that we're kind of looking at. Very similar circumstance. Inside bull bar doesn't really help a whole lot, but noticing that it did close back above settlement, the sellers really didn't take this market back down, and we're getting some of those wicks on the lows. Okay, big deal. Let's see if we can get a little bit more info. All right, now we have an inside candle into a bull breakout. A lot of times these fail. These aren't very successful, but we're dealing with a V bottom. If they're looking for a launching point, we still haven't seen any of those wicks, but this could be the launching point to try to close some of that gapping and move the market back to the upside. Oh man, that dip back down, huge bear engulfing candle, but the candle closed all the way back up. That's a big old failure. And noting that they went all the way back down to settlement, rotated up and closed like that, we're starting to see those wicks coming into play here that would tell us something might be up. This is looking kind of similar to what happened over here. We've got another weak bear bar with a ton of wick all over the place. Not really proving much, but still demonstrating similarities here. And now we've got another really strong bull bar back up. I tell you, if you're looking for a rinse and repeat pattern, this looks eerily similar to what happened over here. And judging by the way that that moved, it's not going to pull back again. So it's either jump on board the train and just deal with the fact that you're going to have to risk all the way down here. Obviously, context would allow you to get out earlier than that. But there is some just massive potential movement to the upside, given that this reversed all the way back up to almost reclaim that previous V bottom. Well, that would put us back up to at least the 5 minute at 42.50. That's a great jump to the upside. And now we're starting to go into the lunchtime session, so we can kind of zoom it forward a little bit further here. And you can see they did follow through all the way back up. Incredible movement, just unbelievable bullishness all the way back up. But a beautiful example of how you can use some of these previous patterns in your advantage, right? They're telling you, hey, we did this yesterday. Pay attention. We're doing it again. And that gave you all the clue that you needed. If you would have jumped in here as an example and it turned around immediately, you know that this pattern is now broken. It either has to immediately go up or get me the heck out of the trade because something's wrong. It's not following what it did last time. And that's the importance when you're looking at those. When something changes, it's giving you a warning. It might be a warning that the move is almost done. It might be a warning that the move is already done and it's time to get out before you get really stuck. But either way, it's something to pay attention to. And these repetitions give you huge clues. So hopefully you found this one useful, interesting, entertaining. And if you have any questions, feel free to drop them in the comments. Don't forget to subscribe to the channel. We're on our road to the 2,000 subscriber mark, and we're doing a couple giveaways along the way. So don't forget to subscribe and take a look at those giveaway videos. Get those comments in there so you don't miss out on the potential of winning, too. But until the next one, I hope you enjoyed, and we will see you all then. Thanks.